Stock market indexes have plummeted to a 6-month low of 16,980 from an all-time high of 18,812. Hi, my name is Ojas and I'm a student of Gokhale Institute, and today we are going to discuss 3 points why the stock market indexes in India are falling.
The first major reason is the collapse of Silicon Valley Bank and also Signature Bank, which has further dampened the market sentiments and has led to FIIs pulling money out of the Indian stock market. So, if you don't know about Silicon Valley Bank, I'll brief you in short. So, Silicon Valley Bank is the 16th largest bank in USA, and its share price has recently fallen down by 60%. It had large exposure to technology industry and venture capital based healthcare. So why has its stock fallen down by 60%? So its portfolio was made up of US Treasury bonds, which was an unhedged bet against increasing the interest rates, which means that if the government increases the interest rates, the prices of the bonds will inevitably fall down. But in USA, as there was inflation and there is still inflation, the Fed is inevitably going to increase the interest rates. So the bond prices started falling down, and they sold the securities for a whooping amount of $21 billion and suffered a loss of $1.8 billion in this. This is why it has collapsed.
The second important reason is rising inflation in USA and India. India's CPI, Consumer Price Index, inflation grew 6.52% YOY, a 3-month high, which was expected to be 5.92%, and it is above the tolerance band of RBI, which is 4 plus 2%. So there is a much higher chance that RBI will again increase the repo rates, which it has already increased by 25 basis points to 6.5% to curb inflation. Same in USA, the inflation has eased from 9.2% to 6.4%, but still the current Fed rates at 4.5% are much likely to increase to curb inflation. Now, but how will the rising interest rates will affect the stock market? With the rising interest rate, people will borrow funds at a higher interest rate, and they will hesitate more to spend their money, which will lead to decrease in corporate profits. It also leads to decrease in borrowing from the companies because they have a higher cost of borrowing, and it also leads to decrease in their expansion and also a decrease in consumer profits. The third, but not a very important reason, is the Adani Group stocks have fallen drastically after the Hindenburg report. This has also dragged the major indexes down.
At last, I would like to say that the stock markets are trading at a 6-month low, and only God knows whether it will further go down or it will retrace back. Maybe not today, maybe not tomorrow, but only one thing is true, that it will further retrace back and will create new highs, breaking its previous highs. So, it's a very good opportunity for the long term investors to invest in some good quality stocks available at a deep discount with strong competitive modes. If you would like me to name some of these stocks, please put it down on the comment section, and I would create a separate video for that. And if you like this in this information, please give it a thumbs up and subscribe to the channel for more such updates. Thank you.